going to jump into the next section. There have been a couple of questions about how the sectors that sports tech has seen investments come through, what kind of ticket sizes are we seeing, how sports are being addressed, which sports are being addressed, and that's what we're going to get to right now. So first, about the sectors. I think Brandon had a question about it. Somebody else had it as well. It's a lot to digest, so I'll do it as quickly and easily as I can. Sports Tech X talks about the sports tech industry through this prism, this framework that we created. And the framework is in three parts. The green section, which is activity and performance, is all solutions relating to the athlete. Everything that helps you do sports, or like either all your trackers, anything where you can book a ground, your performance coaches, all of that stuff. The magenta section, or pink, however you prefer, fans and content, is all about solutions for the fan. Anything that helps you consume sports. So OTT platforms, fantasy sports betting, social platforms, all that stuff sits there. And the blue box is management and organization, is for the sports executive. Anything that helps you as a sports organization execute your activities. So it can be stadium solutions, software for your team, software to help you track your sponsorship, all that kind of stuff. So this is the breakup of what we see. Now, looking at it through this breakup, you'll see that fans and content, of the total amount invested, 8.5 billion goes in fans and content. So that has seen historically the biggest amount. 44% of all investment has gone to fans and content. But activity and performance is close behind. 7.5 billion has gone there, 38%. And in fact, if you remember the top 10 list that Ben took you through, those are the names that you'll see. The Pelotons, the Mirrors, the Tonals, Icon Fitness was in the top 10 for 2020, which do the smart bikes and treadmills. The guy, ClassPass, GymPass, CureFit, wearables and preparation within activity and performance. Those are clearly the hottest sectors right now. There's no question about it. We're seeing a lot of activity in betting. We're seeing a lot of activity in fantasy in specific markets. It's India right now. Fantasy is probably one of those spaces which every developing market, as it emerges, you're going to see a big fantasy sports play in populated markets. Think of upcoming markets like Indonesia, Malaysia. These are markets where fantasy is going to become more widely used. Brazil, and then followed by, and where fantasy goes, betting kind of follows closely behind. Is the trend that we have seen. So that's the sector view, and that is actually supported by this breakup of how the trend across sectors goes over the last 5 years. And you can clearly see the green bar increasing and getting taller and growing slightly year on year. Between 17 to 19, it kind of maintained its position. And in 2020, boom, it went hard again. We're seeing a lot of investments in the at-home fitness space or personal fitness space, which is what drives activity and performance. Talking about, Ben alluded to B2C and B2B. We've had a couple of questions around that, and I'll walk you through that in more detail. But management and organization, which are primarily B2B solutions, that kind of funding stays fairly steady. 2016 was a big year, which was because of the $1 billion that Disney put into BAMTech. But apart from that, it kind of stays at the 10, 12 kind of levels, 10, 12% of the total amount. Why is that? Look, I think that it's basically because the investors they go to the sexy markets, and consumer is where it's what's sexy right now. What draws the biggest eyeballs? Sport is growing. So the B2B, the enterprise focused solutions, the market is inherently smaller. There are only that many B2B, customers you can sell to. So it's not as attractive, but there are good multiples to be made there. You can increase the value of your investment. If you're not, maybe you're not going to see IPOs and you're not going to see unicorns in that space, but there are a lot of companies doing good stuff there. So beyond sectors, we talked about sports. Man, I missed it. I knew I was going to screw something up. I don't know if everybody's seen that already, but I'm going to release a poll in case you have, but you probably have already. The question was, okay, which sport has seen the most amount of investment since 2015? We've talked about esports. We've talked about fitness a lot, and I think keen observers are gonna know what to punch. Horses are clearly important. It's a trending thing. Betting we've spoken about. Maybe that's where all the investment is going. Equestrian sports. It's true. Like man at nature and things, people are missing. Um, Going to the track and stuff. Maybe that's what's going to make them invest more in equestrian sports. I can go on. I can keep talking about equestrian sports. It's one of my favorite things to do and watch. But yeah, maybe not so much. We'll get to the answer pretty quickly. Yeah, 86% of you, 87% of you are right. Fitness is the number one sport which attracts the most amount of investment. It's been pretty clear. But let's talk about what is fitness. Clarify that about how this analysis was done. Look, of course, running can be counted as fitness. Cycling, people can play football and basketball for just fitness. But when it's for a dedicated sport, we keep it in that sport. Fitness is primarily trackers or anything that helps you work out. Like I said, trackers or solutions which give you access to classes, which give you access to devices. That's what we call fitness. And that's a separate industry altogether, and which is one of the reasons that we're going to dive really deep into this with the Fitness Tech report. Esports, I think, Michael, you asked a question about this. Listen, esports, there's no question about the size of this market. Esports also saw a lot of investment. Was a huge trending topic at the start of the pandemic. We saw numbers skyrocket in terms of how many concurrent users, people playing different games. Solutions, interestingly, we didn't see too many big bets there in 2020. But I think the bigger bets were in game developers, people who are investing money there. Those are the things that we don't count into our framework. Simple reason is it's like counting, if we count Riot Games and Ubisoft and all these guys, it's like counting FIFA into the framework, or UEFA, like the bodies that control the game effectively. We also don't count teams, all the big esports teams out there, because again, it's like counting Manchester United or the New York Yankees, like investments, or City Football Group. Like the investments they see are not for the purview of the framework. So that's the separation that we make. But within the more traditional sports, football is the one that sees the most amount of investment. We've seen the popularity of football is unparalleled, of course. That goes without saying. So we're going to dive deeper into that, into the Football Tech report. One thing worth pointing out is to look at the column right at the end. Multi-sport solutions actually trump everyone. But multi-sport, we talk about solutions that anything which is catering to more than 4 sports, right? So if it crosses into the 5th sport and more, that goes into multi-sport. Why 4? Why not 5? Why not 6? Hey, 4 is a good number to call, and it's our report. So there you go. But no, I think multi-sport solutions, these are basically content plays, OTT, news websites, even some wearable devices that can be applied to different sports. That is where the real money, the biggest amount of money goes to sports. So solutions have to maybe open up and branch into new sports pretty quickly. Ticket size. Somebody asked about what is the volume of investment, what trends do we see in angel funding, seed funding versus later rounds. This is a fair indicator. So if I look at, again, the breakup of deal sizes over the last 5 to 6 years, first of all, the column to the far right, undisclosed, that's about 20% of all deals that we have in our database where we don't know the value, so we keep those out. But amongst the rest, 90% of all checks are written at below 10 million. That's a fair amount. Not surprising as well. Of course, more checks go at the base of the pyramid. But you'll see, if I look at this chart as a conversion funnel, right? So if I think of the life cycle of a company, so I want to raise my first sub-million round, my seed round. If I look at the ratios between each, so for every 1.5 companies, 1.5 deals at 1 million, there's a deal between 1 to 10. It's a broad spectrum, but think of 1 to 10 as your Series A. So, but for every 1.5 companies that makes a seed round, 1 company does a Series A round. Interesting. But then there's a big drop off from 1 to 10 to 10 to 25. For every 7 companies that raise 7 deals in 1 to 10, there is 1 deal in 10 to 25. So that's when investors get really picky. But once you hit that plateau, then you see it flatten out. Then investors, like it's the rich keep getting richer. You're going to invest more in the companies that you've already invested. And those companies continue to raise funding. For every 2 deals in 10 to 25, you see one in 25 to 50. And in fact, you see more, once you've raised over 25 million, listen, you're going to get funded again and again. You see more deals over 50 million than 25 to 50. So I think that's an interesting way to look at this chart. The last graph, and we'll save a couple of minutes for questions right at the end, is again the conversation on B2B and B2C. Look, we've addressed this a bit already. The clear trend is consumer-focused applications. There's no doubt about that. Whether it's esports, whether it's fitness, whether it's content, those are the companies. We saw it in the unicorn list, we saw it in the IPO list. Those are the ones that really make it big. So naturally, those are the ones where investors go. That does not mean that there aren't investors who are willing to make B2B bets. There is good value, ton of good companies that attract investment in the B2B segment, but not even close as compared to B2C. It's like a typical 80-20 split we've seen for the number of startups that exist in the database and the number of deals as well. All right, guys, I'm going to jump straight to the key takeaways to sum this little session up before we wrap things up today. 19.2 billion invested in sports tech. That's a lot of money over this period of time, and we're only seeing that trend grow. The ticket sizes are high, driven by Asia primarily. In Europe, the ticket sizes are lower, but 2020 saw a record ticket high. I think obviously investors were less likely to make as many deals, but they've made some big deals in 2020 already. US is a behemoth and will continue to be. We don't see any. I mean, China is the closest, and China's half of the US. That's not going to change anytime soon. But the US is the solution. The way to look at it is that the US is the trendsetter. The solutions that find success there, will those all translate to Europe? Probably not. Will some, especially around broadcasting solutions, especially on engaging fans in a deeper way. So that kind of stuff is going to come across the pond really well. In terms of sectors, fitness, that's been the hot one. Content and esports, we've seen a bit of it in 2020, but the gap to fitness is clear. But yeah,